Lard Friese is the CEO of Aegon and joins us now. Lard, appreciate the time. Thank you so much for joining us then this morning. You've been working hard to dispel sort of any weakness in your net profit for some time. You had the 3% uptick in the first half of the year. Now you're seeing that raising of the guidance on that operating capital generation by around 16%. Can you fully say that your below-the-line profits are a time that is behind you?
Good morning, and thanks for having me on the show again. This morning, we're giving a trading update on our progress to the capital markets. We have indeed raised our full-year guidance for the operating capital generation, which is up 16% on the quarter. Our commercial results in the in the US are very strong, 10% up in life insurance sales and more than double our written sales in retirement plans in the mid-market in America. And we see a mixed picture in the UK with strong workplace solution sales, but a weakish picture on the retail side. And in our other countries, especially in Brazil, also commercial momentum is strong. To top that off, we've also disclosed today strong capital ratios, which means that the balance sheet remains very strong. And that is, I think, demonstrating sound progress that we're making on the implementing of our strategy, of which we gave an update a couple of months ago in London on our Capital Markets Day.
Yeah, you also speak about capital ratios in the main units remaining above the respective operating levels. Sustainability of this, though, in a tough economic climate, choppy markets, higher interest rates, inflation still not necessarily at levels that central banks would even want it at. How do you sustain these levels?
We are cautious. We realize that we're living in a world with many geopolitical dynamics which are highly concerning, with an inflation that is being fought by central banks, with a lot of interest rate volatility and potential a lot of market volatility ahead as well. So what we do is we run multiple scenarios. We are an institutional investor. We always ensure that the hedging that we do to our capital ensures that at all scenarios the client's money is safe with us.
Lard, can I turn your focus to the UK business? A fascinating story early in the week from BT that had cut the funding deficit around the pension. We all know it's one of the biggest pensions out there and it's had issues over the years. What are you seeing in terms of the high interest rate, the ability to cover some of those long-term liabilities and the actual appetite of the marketplace for pensions at this point?
We are seeing already for years, Karen, a move, of course, from defined benefit to defined contribution pensions. And the retirement plan market has evolved very positively over the last years, and we continue to see momentum there also in the future. Our position is quite strong. We are a top 5 player, and we have seen over the last quarters our workplace solutions, as we call it, so our retirement plan sales to employers increasing. And also this quarter, in spite of the fact that we lost a large client, which is very unfortunate, but unfortunately these things happen, the underlying trend is still that the workplace, so the pension business, is growing. On the retail side, it's a different story because we're seeing in the UK that there's a cost of living crisis. Inflation is relatively high, still very high. And as a result, sentiment of investors is, let's say, retail investors, is not that buoyant. And the industry is facing that. Now, we are responding to that by ensuring that the retail platform that we operate is continuously improved so that the independent financial advisors that use that platform for administering the assets under management of their clients, that they choose us over others. But the backdrop in the retail space is still subdued because of the economic pressures in the UK.
Lard, as you look at the macro now, we've had a very interesting week where we've had very tame inflation that's crossed in various different parts of the world, from the United States to the UK. How are you thinking of the higher rate environment? Because the message from central banks was that it was higher for longer, but the data has put a question mark around the timing and pace of rate cuts in 2024.
Yeah, I think inflation is not stamped out easily. Central banks over the last years have done a lot of work The Fed has raised interest rate levels 11 times now, but it takes time to work through the system. And that is something that is happening as we speak. And yes, we're seeing encouraging data coming through, and yesterday as well from the United States, where we're seeing that inflation is slowing down, is actually coming to reducing, which is good. But it's not anything near to the policy objectives of central banks. So I think it will take time for inflation to truly settle down, and also time, therefore, for, I think, the ability to cut rates. Now, the market is, of course, speculates on whether rates can be cut sooner or later. For us, interest rates levels are at a higher level are good for the industry and good for Aegon, and also good for our clients as our products become way more attractive to them. At the same time, stability of interest rates is very important. We've seen a lot of volatility. We've been able to shield and navigate through that very well and shield the balance sheet very well for that. But stability in interest rates at a certain level is, I think, also something that is required.
And Lard, before we let you go, can I ask you about Brazil and the joint venture that you've got there? Because some strong numbers delivered now, new life sales almost doubling compared with the same time a year ago. What sort of growth are you seeing in that part of the world?
Well, we're seeing actually there's a lot of demand and a lot of if you for instance look at the level of insurance per capita in Brazil versus the western part of the world, there is still a lot of ground to be covered. And we have worked with our joint venture partner already for a very long time, and they have consistently outpaced the market in terms of sales growth. We're very pleased with our partner there, and we're collaborating very closely, and actually have increased our stake to 60% economically in the last quarter.
Lard, thank you very much for joining us again and walking us through the numbers today. Lard Friese with us, the CEO of Aegon.